Today we're talking about money, making money, cryptocurrency, blockchain technology, and decentralized finance. But more importantly, I want to talk about how I think a lot of people that are depositing their money with banks are actually getting screwed. So let's look at the traditional model. You take $1 million, you put it into a term deposit with a Western bank, and you're probably getting between 0.5% to 2% return on your term deposit. Now that's not even your real return, that's just your return that you're getting for your term deposit. If we wanted to look at your real return, we'd be looking at your term deposit rate minus the rate of inflation, in which case your real return is probably looking negative or close to zero in my opinion. But I actually think the CPI numbers are actually heavily understated, and CPI numbers is just a matter of how you calculate things. But let's move away from that. Let's talk about what happens with your $1 million. The bank then takes your $1 million, it then lends it out and invests it with other parties. That $1 million then makes a return. Part of that return stays with the bank to cover its operational costs. Part of that return then goes off to shareholders to pay dividends. And part of that return then goes to you to provide your return on your term deposit. Now you might say, well, what's wrong with that? Well, my argument is the bulk of that money and the return is not going to you. Now, in the new decentralized finance world that's emerging, there are now companies that are taking your crypto, they're lending that crypto out, they're making a return on it, and then they're paying the bulk of the return back to you. And the yields are a lot higher than banks. So what I'm forecasting for the future is what's going to happen is as more of these companies emerge, companies like Celsius, for example, as they start to emerge, what's going to end up happening is people are going to expect greater returns from their banks. Now, what these new decentralized finance companies are doing is they're actually doing a number of things. Number one, they're creating a marketplace. Number two, they're creating transparency. Three, they're providing higher returns to people that are depositing funds with them. And this is why I can actually see that a lot of these new decentralized finance companies could actually start to become the new banks. And traditional banking is going to be a lot of trouble in the future. What I suspect is going to end up happening though is we're going to start to see a synergy emerging between traditional banking and these new emerging banks where the two parties start to work together. Because really, at the end of the day, they actually complement one another in a lot of different ways. You have an old established system and you have a new system emerging. Then the point is this, our whole economy right now is based on the old system, the old traditional banking model. The new banking and new financial model, whilst it's emerging, cannot take over until the two start to synthesize and work together. And right now, it's a battle between new and old. People's vote with where they deposit their funds will ultimately determine which way things go. Guys, as always, please like and share this video. Until next time, I look forward to speaking with you. Take care.